Now, another common question that many people ask is that why is the stock market really important? Now, many people ask this question because of the wide coverage the stock market receives in various media sources. Now, it's a fair question and one we'll try to answer in this lecture. Stock market is important because it serves a range of important functions and purposes. Firstly, stock market is one of the most important ways for businesses to raise money. The alternate way for companies to raise money is by raising debt, which is basically taking a loan where they have to pay regular fixed or floating interest rates, and also they have to make principal repayment at the end of the loan term. This means that they have a fixed obligation to lenders whether or not their use of funds turns out to be profitable. In contrast, when a company raises money using equity, it is not required to pay any money regularly to the investor or at maturity. So you can understand how raising debt could make things difficult in terms of cash requirements, as because of interest payments, lesser cash would be available to be used for working capital purposes or for expansion purposes. Also, since the loan raised has to be returned at maturity, the company has to manage its working capital and investments accordingly to ensure that it repays its debt on time. If the company fails to repay its debt on time, the lenders may require the company to liquidate its assets in order to repay its loan. This, of course, may affect the day-to-day operations of the company adversely. In contrast to this, there is no such maturity date associated with equity. So once a company raises cash by issuing equity, it has relatively more freedom to take long-term investment decisions using that money. Now, raising money by issuing equity also allows businesses to be publicly traded on an exchange, which allows the company to raise additional capital for expansion by selling more shares. This is also beneficial for investors because since the company's stock is trading on the exchange, it becomes easy for the shareholder to sell his stock when he wants to. In absence of the stock market, it would be very difficult for the investor to find a buyer who is interested in his share of the business. This means the shareholder benefits by the presence of a liquid market which can be used to buy or sell their stake as and when they deem fit. This makes stock investment a very attractive option when compared to other options like real estate, which are very liquid, as it is very difficult to find a willing buyer or seller for real estate. Stock markets are also considered to be the primary indicator of a company's economic strength and development. Rising share prices are associated with increased business investment. Share prices also affect the wealth of a household, which directly affects their consumption pattern. This in turn means that the government and central bank of a country often follow stock markets very closely, and this is one major reason why the stock markets are very well covered by the media.